Hey everyone, I want to go over a lesson here in the Potstock University about buying when there's fear in a market. And this can apply really for anything, the contrarian point of view. We can talk about, a stock like Facebook we'll go over when they had that data scandal. We could go over a real estate even, the housing market when, everyone was selling their homes or home prices were rock bottom. Imagine that to now where the real estate market is booming, to cannabis stocks we'll get into again, but even Bitcoin. I shared my personal story of my good buddy who had a basket of cryptocurrencies from a couple years ago. He put $20,000 in a book of all these different kinds of altcoins and Bitcoin out there, and within a year he was up six figures, and he was going to use that to pay off his house, and he never sold. Well, instead, pardon me, he sold back in December of 2018, so right in the beginning of the new year. And I want to go over exactly like what happened and why. And this is just coming from an investor point of view out there, and why sometimes investing can be very painful, especially emotionally. So here he was. Again, Bitcoin and the cryptos were booming, and then they had that steep decline. Some of them fell 30, 40, 50% even. And my buddy Walter, when I ran into him at a New Year's Eve party, he was a seller down in here, okay, around, again, literally the dead low. So that's the max pain. Usually when you hear people selling or getting stopped out their position, um, that's the max pain in any market. It's where they simply say, okay, I was up money, a lot of money, in my buddy's example, and now I'm break even, and they still don't sell. Then they see that they're negative or they're losing money, so they say, I can't take it anymore. They're forced to where they come in. That's a bad example. They're forced to come in and they're sellers down here. Again, the dead lows. And then what happens? Um, you know, the price of Bitcoin and really all the cryptocurrencies, well, they went up. Bitcoin went up from 3,000 to 9,000. Those are extremely um, aggressive moves in a short amount of time. Again, we're talking about 6 7 months here. And who's buying, or why is there buyers showing up? We can look at basic support and resistance, supply and demand, and a couple stocks. So one that really probably a lot of people can relate to out there was Facebook, and I'll just pull it here. It's sink or swim. Pull it up on a weekly chart. Facebook got as high as 218 a share, and it had that rapid decline here to about 125 down here, right? So nearly $100 move lower to the downside. And what was happening on this big move lower here was they were having a lot of negative publicity. They sold clients and users information, and the whole scandal with Cambridge and stuff like that. Um, Investors were saying, "Oh no, this is the end of Facebook. I'm going to sell." When we see these negative news, now it could be a one-day event, it could be, let's say, an earnings event or weekly event, or just maybe even like Facebook, a prolonged scandal. We can use that, and I'm not saying go and put your whole book into a stock, but we can look at that as an opportunity for a starter position, because usually once that happens, we'll call this the max pain down below when a rapid decline happens. And pardon this epic pen, the mouse is getting a little stuck here, is we usually shoot up, again, just like in the Bitcoin example, very quickly. So for a name that I like trading in the cannabis sector is Cara Therapeutics. A lot, and it's not just this one of these old school pot stocks. It's a lot of these names, which give us a huge advantage right now, is they were left really for dead because no one was talking about them. So Cara had a beautiful run. Stock went up 5x in value, and then it kind of just died. You see volume here, very low. Really around 15 a share. The stock just kind of settled. It didn't move any lower. There was support, there was demand. It just stood there. Again, kind of left for dead for months. And then Cara had a little bit move higher into some supply or resistance. And then recently, to start 2019, it pulled back. So when we have these pullbacks, these fear pullbacks, as a trader, what you can do is start uh, what I like to call starter position. So let's say you normally risk, let's say $10,000 per trade. So we'll say 10K per trade or um, per position size. What you can do when there's fear, and when you look at, let's say, 3 red candles, we'll call it. So here, we'll pull up the example. We'll look at it in a real-time situation here in Cara. When you see something like this, to where it looks awful, I'll be honest and blunt. The chart, it goes from 24 and pulls back all the way here to 14. I mean, this is very nasty selling. 18 to 14 in a matter of days. When you see this kind of fear, and let's say you normally put 10K on a position again, what you can do is say, I'm going to take, so you put 10K per position, you say, I'm going to take the contrarian point of view, and I'm going to start building a starter position. So out of that 10K normal size position, you put 2K to work, right when there's fear. Now the market here starts moving. Now it starts moving in your favor. We'll call it here. We'll call it here around 19 a share, right? So then what you can do is add another 2K. So now you have a 4K position, and you're already up money from 14 to 19 a share. So you're already up 5 points on the stock. And then on the next pullback, if you get one, because now you're already right, which is a great feeling, you can buy some more. And if not, and the stock's here at 25 a share, you just took literally one of the dead lows of the stock, a recent pullback. You use that to your advantage to take a starter position, and now you're already up money. You added, and now you're up even more money. You're taking that contrarian point of view, and instead of holding pain, instead of buying it when everyone else is buying it, let's say up in here or up in here, you were the only one buying it down below. So you were literally one of the first people to buy it. You were the smart money. So you had minimal risk because you only did a starter position. It went in your favor, which is fantastic. And now that money's almost like free money. As the stock goes up, what you can do is just raise your stops. So you bought it at 12, or we'll say 14, raise your stops to 18. You bought some more at 19, raise your stops. And you can just doing that to ride the stock completely. And that's what I did in Zenobia Pharmaceuticals. I always talk about this example because the stock was $25 a share at one point, and again, this is one of the early stages of the cannabis stocks, and then it tanked. It went to $3 a share. And when this happens, when a stock drops that much, people just forget about it. And you can look at volume down below, and there's no volume to the start of this year. When you start seeing that volume increase, that demand, those buyers increase, usually they're on to something. And for this example, they were dead on. You have a move here from about 4 to 6, and then the stock never looked back and traded up to 16 a share. So the point of this lesson, let's sum it up here, is to, when there's negative news, negative sentiment on the market, take that as an opportunity to build a starter position. Are you going to be wrong sometimes? For sure. You're going to be wrong. But if you start, let's say again, that $10,000 is your normal size of position. You start with $2,000, maybe a fifth or a fourth of your normal position size. If you are wrong, let's say the stock continues to drop, you're going to get hurt just a little bit. And if you're right, you're going to be right, and usually you're going to be right quickly because the stock's going to move up quickly, just like we saw in Bitcoin and Cara, Zenobia, even in Facebook there. And you're going to make money not only quickly, but usually it's going to be an aggressive move to the upside. So you're not just going to make a couple $100 or so. Usually, you're going to make a very, very healthy return. And that, as a trader, that's what we want to do, is to take advantage of these opportunities, make money quickly, put it in our pocket, move on to the next trade.